In this video, we are going to discuss how the gender of the policy affects the performance of the policy. So let's get it going. Woo! All right, we're going to have some fun today. When it comes to looking at policy performance, we are doing a series of looking at all different factors: gender, health, design. There's literally going to be tons of different factors that are involved. I think there's ends up being 5 or 6 plus different factors that play into it. But in this video, we're going to talk about specifically how gender affects the policy. And the reason why this can be important to you is because you may be deciding, okay, I want a named asset. I want an overfunded policy, but do I do it on myself? Do I do it on my wife? Who's more efficient? Does it make sense? And there's going to be a couple different factors that are going to play into this around death benefit, breadwinners. Obviously, efficiency of the policy is going to be a factor as well. And so what we can at least do is ask the question of which one's going to be more efficient just based off of gender if all other factors are the same. So health, design, age, all those other factors are identical. We're going to see how performance changes when it comes to actual gender. So with that being said, let's go ahead and jump right into it. Here we go. This design is going to be the original design that we've been looking at throughout this series. Female, age 35, super preferred, $100,000 dump in, $50,000 a year after that. I'm going to go through this quick because this is in every single video. 92% liquidity, break-even point is year 4. What we're going to do now is just compare. Everything's going to be exactly the same when it comes to all factors except the gender. So I'm going to pull up the male. We're going to see that the male is the only difference in this policy design. So you'll see here, male, age 35, super preferred, all things identical. We're rocking and rolling. Contract, all the same, 100,000, 50 a year. They're both 85-15 from base to PUA standpoints. And when we're looking at now the cash value standpoint, year 1, 92,444. We come over here, look at the female, 92,360. So ironically, I actually mentioned in the first video that the policy was going to have more cash value year 1 based off of it being female or male. But to come to find out, I learn things here every day, right? The difference is about $100. There's actually less cash value in the female one than there is in the male one. 92,360 in the female, 92,440 when it comes to the male. So now when it comes to the factors of when we're looking at break-even point, the female one, 250,782. And now when we look at the male factor is going to essentially be break-even 251,276. So when we're actually looking at this policy, the male contract is actually, when it comes to efficiency, is a little bit more efficient than the female. When we're coming to look at break-even point and the liquidity and the amount of the cash value that there is in the policy. Now, let's go ahead and take a look at a deeper, longer time of how the policy performs over a period of time. So if we go to year 10, this is going to be 646. And once again, this is going to be the male side of things. Year 10, 646. And then when we're coming into the standard of female, it's going to be 645. So when we're looking at it, it's literally identical based off of a couple different, thousands here and there or hundreds earlier on and thousands, with year 10. We're looking at death benefit, 1,743,000 for the female. And for the male, it's 1,618,910. So now you're asking this question, well, if you said that in the first video that a female policy should be more efficient because they live longer, well, what is going on? Why is there actually more cash value in the policy with the males? Well, here's actually what's going on. So when we're looking at the policy, every single person is going to be given a death benefit amount based off of age, gender, so on and so forth. This person specifically, with all factors, because of their age, is been giving a specific amount of death benefit, and that death benefit is going to be slightly more because a female is going to be projected to live longer. The insurance company is going to give them more death benefit. So if you're somebody who's really, really young, so let's say somebody who's 20 years old, for the same exact design, this number could be like 2.5 million because you're going to live longer. You're likely to die later on in life. Therefore, the insurance company is willing to put more risk, more of their liability on the table based off of your age and your gender and your life expectancy. So because there is less death benefit here from a male's perspective, and when we come to the female perspective, there's more death benefit, 1.743. Therefore, in theory, there is a slightly more death benefit costs for the female side than there is for the male side. Now, it's not much, it's just slightly different, but at the end of the day, bang for your buck, you're going to get more death benefit for the female. And long term, when it comes to like the end of the policy, you'll have more death benefit, which essentially means more money coming to your family, household, and the economy. So yeah, you may have slightly more money in this instance when we're comparing apples to apples for the male over the female, but that's because you also have less death benefit, slightly less expense charge. But at the end of the day, both amazing policies, both performing really well. Very, very slight minutia differences between the two. And you learn something new all the time. Hope you got a ton of value from this, and we'll be going to the next section of the slight change in regards to making this policy slightly different and why and how it affects the performance of it. Hope you enjoy.
Hey, I want to thank you so much for watching this video to the end. This video is on life insurance, and if you have more questions about life insurance, infinite banking, why you should overfund it, we have a link below that goes to our And Asset Vault. This is a free vault that gives you everything you need to know about life insurance. We have case studies, we have a calculator on there, we have a handbook, we have frequently asked questions, we go through a process. I have my masterclass on there. We literally want to be the one-stop shop for every life insurance decision. And so if you want to learn more, click the link below, and we look forward to educating and maybe opening your mind and eyes to the power of life insurance.